Is your portfolio down by 20, 40, or 60% regardless of the pandemic? Is that what you really want? Are you the type of person who is a short-term trader, then you've become a long-term investor because of what had happened? Until when? So that's the question. Until when are you going to wait for that stock to go up? Alright, historically, does it go up? Or future-wise, are you optimistic about it? Now, in this video, we will discuss 3 tips to avoid losing big, of course, in the stock market. If you are new to this channel, please do subscribe to my YouTube channel right here below. And please do like my Facebook page. It's Kevin Autea. So here's the video. Before we proceed with the 3 tips on for you how to minimize your loss or avoid losing big in the stock market, you should first consider 2 things. What are your goals and what is your risk tolerance? For example, your goals. So your goals will be, I will be trading this stock for days, for weeks only, and that's it. Alright? And if you are an investor type or a momentum trader or a long-term trader investor, you wouldn't mind those big loss because you know in the future that it will grow bigger still. Alright, next, number 2, risk management. If you are a trader, how much are you willing to lose? Alright, for sure, you cannot predict most trades. Alright, you cannot win most trades. Right, you will lose maybe, I don't know the numbers yet, maybe 50% of the time, but make sure that you lose only a little portion of it, maybe maximum 5%, around 3 to 4, 5%, that would be the max of it. Then the gain will be unlimited. Alright, so here we will discuss about the 3 ways or 3 tips on how you can avoid losing big in the stock market. Alright, number 1, for short-term traders. Alright, all of these things that I'll be saying, I have a script here. So later in a while, I'll show you the figures so you can visualize it, you can pause it. So just let me explain this here in the video. Number 1, for short-term traders, do not lose more than 1% of your capital. Alright, 1% of your capital. Say for instance, you have 100,000. Alright, no, the 1% of that one is 1,000. Okay, so if you are trading 20,000, so that's 20% of the portfolio, you are not allowed to lose more than 5%. So what's the 5% of 20,000? That's 1,000. Right, that's quite big actually. So maybe that's the maximum, right? 5%. You can 1%. You can trim that down into 0.75, into 0.5. Usually some of the traders I've seen, they are only limiting their loss into 0.25 to 0.5, so that's quite tight. And yeah, the maximum will be 1%, right, to avoid bigger losses. Next, for long-term traders, we have 2. So this is the second one. Cut loss or lessen your exposure, because the number rule that we have here is risk management. So if you see the trend that is going down, I mean, I'm assuming you know how to read charts using indicators. If you see the trend that is going down, you will have these indicators or this emotion or this thinking that what if this stock will go down, right? So that's where risk management will come into place. Your indicators have matched that these stocks will go down or most probably go down. You might want to have to lessen your exposure or cut loss. Maybe you are just break even, or the stock went down below 3% already, and you admit that you made mistake investing in this stock, but don't hold it on for too long already, because there are a lot of opportunities out there, a lot of companies that can give you high profit in a short period of time. You just need to time it. But this time, the stock that you bought unfortunately didn't proceed well with what you want or what you expect. So that's why you need to lessen or cut the loss. If it went down, you're already out of it, or you have a lesser exposure or lesser loss. If it went back up, you can just ride it again. Maybe you after 2 or 3% or 5% back up again, as long as your indicators tells you so. Number 3, we have these are especially for investors long term. Add more on reversals. Take note, add more on reversal. It's not bottom, because we cannot really determine where will be the bottom is. Maybe there are some people who are lucky to just purchase it down below. Well, it went up all the way already, so they hit the bottom. But that's lucky, or I don't know if it's a skill, if there's a skill about it. But what I'm suggesting here is that buy or add more when it's on the reversal. What does that mean? Of course, if you buy at the bottom or below, you don't know if that's the bottom or that's the lowest part. Again, especially if you don't know yet how to read indicators. Alright? So what will happen if you buy it below? The tendency, you don't know, the momentum is still big, or the momentum still there. You bought it at the quiet correction, it's moving upward, but eventually it headed down on the following day. So you bought, or you do average down together when the stock is still going down. Alright? Not other than what I'm suggesting is that when you see a small reversal, alright, like confirmations of 20 EMAs, 50 EMAs, the MACD that are crossing, that's the time that maybe you can ride, or you can add more to your stock, just to make sure that the stock, alright, with conviction, will go up already. Alright, maybe you cannot maximize your gain with that, but I mean, it's better to be safe than to be sorry down below there. Alright, that's the point of it. It's really risk management. Lessen the loss. Lessen the loss. So let me just explain this in this short video. I will tackle just my script here. Alright, here I have the script that I'm talking about earlier. So this is the risk tolerance. So for the short-term trading, you should have your end goal. All right. Are you a long-term? Would you like to get it within minutes, hours, days, weeks? All right. This is for like day trading or swing trading, momentum trading. Okay. Now, number 1, not more than 1% of your capital. 1% or less. So that's the idea of this one. 1% or less. So for instance, if you have 100,000 in your portfolio, then the 1% of that one is 1,000, and you are trading 20,000. Your maximum loss must be 1,000 only, or that's up to 5% loss only. Okay, so that's the main rule. So if you're trading like 10,000, so that's the 1,000 of it is 10%. So that's 10%. Okay, next, long-term investing. I have 2 here. So actually, this is the second. Duration, this could be like months to years. For long-term investing, cut loss or lessen exposure. This is especially for the short-term volatility. So if you have 100 shares worth 10 pesos day 1, right? So that's the first day, 10 shares at 10 pesos. Then the price is falling, right? Then you know it, right? You know it, but because it's supported by the indicators, say up to 9 pesos on day 2, you can sell half or 1/3 or 2/3 of it first. My point here is you should lessen your exposure. For example, here's a scenario, right? We will use halves. Say we sell 50 shares, so that's 450 cash out. Alright? That's 50 shares out of this 100. Now, the value of that one is 9. You now have 450 shares. Here. Here's where the risk management will take place. If the stock goes down to 8 pesos on day 3, and you plan to sell everything or cut loss totally, the value of it is now 400. Alright, so the remaining 50 shares times 8, so 400. Your total loss is only 150. That's 1,000 minus, ito, 1,000 minus 450 minus 800 equals 850. 1,000 minus 850 is 150. So that's 15% loss only. Rather than selling everything at 8 pesos. Right? You will only have 800. So that's 100 shares. Sell it at 8 pesos. So you lost 200 pesos. So that's 20% loss. See, there's a quite big difference. And here's the second example. After selling 50 shares worth 9 pesos, so that's 450 again. And on day 2, the stocks went back up again at 10 on day 3. If you buy it back once again using your cash of 450 at 10 pesos, so that's 450 yung kaninang winidraw mo, which 9 pesos value of 50 shares divided by 10 because that's the price. So you have 45 shares. Total shares you have now will be 95 compared to 100, right? If we compute for the current value, that's 95 shares times 10 pesos. Yun yung value today. So you have now 950 pesos. So you only lost 50 pesos or 5% over 100 versus here if you do not do risk management. So that's 15% or 20%. Okay, I hope you're getting my point there. Lastly, these are for long-term investors. So I suggest if you are still a long-term investor, you should check it from time to time pa rin. Because there are some indicators like moving average, if the 200 has already been broken below, so might as well cut half of it. Kasi like for this one, you will not ride half of it. Alright, I'll explain more in this example. This is the third one actually, or the second for the long term. Add more at the bottom or reversal, or most likely more at reversal. Ganyan na lang. Major correction usually or economic crashes. If you really believe in the stock fundamentally and it's for long term, you'll add more when it's down. Especially today, the pandemic, most likely you are adding because whether it will still went down, you already buy or bought it at a cheaper price. Alright. So here is the idea behind this one. If you have 100 shares worth of 10 pesos today or at day 1 and the price went down, don't buy immediately. Look for signs of reversal first. Here's the example. 100 shares you have today, price per share is 10, so the value of it is 1,000 for a while. Here. Then you don't know what will happen next, so you bought it below or when it hit 9 pesos because you thought it's the bottom, it's cheap, or it's going down, so you bought it at 9 pesos. Okay, so you bought it at 450, you have extra 50 shares. Next, you bought it at 8 pesos because that's your strategy. Every time it went down, you are buying a stock. You bought it at 800 pesos and you have 50 shares. Now, alright, the total shares you have is 200. Then, let's say, bumalik ulit siya. It went back up again at 10 pesos. Okay. Your current value is 2,000. So, that's total gain is 150. Why? 1,850, alright, minus or 2,000 minus 850, that's 150 or that's 8.11% gain. Okay, next. Here's the suggestion or the strategy. You won't sell yet on the 9, alright, because you don't see any reversals yet. Okay, maybe let me adjust this one to 8.5 and compute it right away here. All right, because when you say 8, it's like hitting the bottom or buying at the bottom. I mean, we are realistic here that we cannot, or it's a lesser opportunity for you to buy it at the bottom. But the idea is you buy it if there's a reversal sign already. Okay, so 100 shares times, or the price 8.5, so 850, that's 81850. So most likely that's around the same. Okay, but if we will stick with the original plan, let's say um, so with this scenario it's just the same, right? 1850. But if we will stick it at around maybe 8.25, so you have gained a little less over. Okay, so this is an actual, right, computation. So that's 2000 minus 1825. So that's 175 gain. So that's around 8.75%. Right? A bit higher than this one. The main idea here is that you are using risk management. Again, it's important, risk management. Because here, you don't know if the stock will go down, or at this point, you don't know if the stock, again, will go down. Might as well buy it at a lower price or at the reversal. Right here, right? There's no reversal signs yet. The scenario here is that you buy or you bought it when it hit below at the round 9 area without reversal signs. Okay, so I hope you got the idea. It's quite technical when it comes to the figures, but if you really understand about the charts, or you just patiently wait for the bottom, you can get the maximum price of it. If you have any questions about this one, you can message me. Then I am free to give you advice or coaching, mentoring when it comes to the stock market. That's it. And please do like my Facebook page and this YouTube channel. Thank you everyone for watching. Pwede ka na mag-isip-isip. Technical yan naman. Yes. Ibig sabihin, ito yung resistance niya, the break niya. Hindi mo to alam kung wala kang technical mga chart. Unlike dito kapag bumili.
Tapos pag bumili ka dyan, tapos pag nag-ano siya ng paakyat, hindi ka na magpapakyan.
Pwede. There's a trend, di ba? May line dito eh. Again, kanina yun yung resistance, di ba? Na alam nila hanggang dito lang yung price, kaya bibenta na sila.